Good evening, ma'am. I'm Stamba and my register number is 23MB51. So today I will be talking about the financial performance of a company, like why you must invest in this company. The company I have chosen is Jyothy Laboratories Limited. Why I have chosen this company is because it's a well-established Indian fast-moving consumer goods company. It was started with a very simple mission, that is to touch and better the lifement of all the individual in the Indian households. So it started with a single product and has grown into a trusted name in the houses of India. With every creation, this company, that is Jyothy Labs, stays true to its purpose, improving lives with one innovation and one time. Next, I will be talking about the overview of the company. Jyothy Labs was was found at 1983 in Thrissur, Kerala, by Mr. M.P. Ramachandran. So he was a sole proprietor of this company. He started it as a single man and he's led it till now. They have a crossover or turnover of around 1,800 crore, and the vision and mission of this company is to improve the quality of life for consumers by providing effective, affordable, and sustainable daily use products that bring value to every household. Next, we'll be seeing the board of directors. Like I mentioned, Mr. M.P. Ramachandran was the chairperson and the managing director. He stepped down from his position and passed on his managing director and chairperson role to his successor, that is M.R. Jyothy. Miss M.R. Jyothy is his daughter, and the name Jyothy Laboratories was inspired from her name. So now we'll see the independent directors. So who are independent directors? Independent directors are directors who basically do not have any relationship with the company, but do favor the company, or they look into all the matters of the company, but they will not be in any way directly related to the company. So he is an independent director, that is Bhumika Batra and Aditya Sapru and Narayana and Suresh, and he is only direct director of Labs Limited. So next we'll be looking into the products of Jyothy Labs. You all would have known Ujala, the EXO, whatever used in your house. So now you will be knowing from which company is it coming. So first we'll be looking into fabric care. Under fabric care we have Ujala and Henko, Mr. White and More Light. These are the detergents you use for your to wash your clothes. Next one is home care, that is during rainy season a lot of mosquito repellents get sold out, and the most wanted company is Maxo mosquito repellent, which is from Jyothy Labs, and also the next one is Tea Shine, and the next one is Maya Agarbatti, is the one you use to do puja and everything. The next category is personal care. Here we can see Margot, the soap which our grandmothers or grandparents used to use. And next we have is Durins, and next we have Neem Active toothpaste. Next we have is very basic and very popular one, that is dishwash, Exo and Pearl, which we all use at our home. And the last product here is laundry service. They have special laundry service that is called Fabric Spa, where you can send your clothes or any other materials, say screen or whatever it is, for you to make it clean, dry clean purpose or whatever it is. Next we will be looking at the milestone of the company. Here I have taken only the important milestones which according to me are most significant compared to the others. In 1983, like I said, Jyothy Labs was founded by M.P. Ramachandran in Thrissur, Kerala. And in 2003, they were awarded with the triple A brand performance for Maxo, like I said, the mosquito repellent. And in 2007, this company was listed in BSE and NSE stock exchanges. And in 2016, Jyothy MR, that is the current managing director, who was appointed in April 2020. She won an entrepreneur award and also influenced 50 around women because of this. Next, we will be looking into the performance of the company. So first, I'll be talking about the market snapshot. Now, what is the market snapshot is? Sorry, one minute. Okay. So basically, I'll be telling you what the rate price of what is the current rate price of the share is. And if you see, the current rate price of Jyothy Lab in NSE is 799 on April 9th. 379 on April 9th. I'm extremely sorry, I have some eyesight problem. So it is 379 on April 9th. And if we see today's low and today's high, that means on April 9th the amount had come up till 340 and it had reached to 389, and 52 weeks low and 52 weeks high is in that year it came up to 300 price, and then it came up to 595 rupees. That means it has a potential, it 595, so it has the potential of coming up to that level. So it is a very good choice for you to invest in this company. In this line I'll be repeating again and again. So 595, and it opened on April 9th. Generally markets open at 9:30 in the morning and closes at 3:30 p.m. in the evening. So it opened with a price rate of 342.95 and it closed at the rate of 379.60. This is nothing but the graph of that day. Next, this is same thing, ma'am. This is April 9th graph. 9:15, if you see, it opened at 3:34 a.m. 3:34 price, and then it closed at 379.60. Next. So the first ratio I have taken here is liquidity ratio. Under liquidity ratio, we have two ratios, that is current ratio and quick ratio. So now let's see what is current ratio. So basically, current ratio measures a company's ability to pay off its short-term liabilities using short-term assets. That is the meaning of current ratio. So the purpose of current ratio in this company is to show that whether the company has enough resources to meet their short-term obligations. So now if you can see here, the blue is current ratio and the yellow is quick ratio. If you can see in the video, I am not sure, but blue is the current ratio, and we can see here that from 2019 it has been completely smoothly increasing. There is no drastic fall or drastic increase. With a constant race, it's been increasing from 2019 to 2023. So that shows financial stability, stronger working capital, and reduced equity risk. Next, so generally if current ratio is above 1, it is very good, and if you see in 2023 it is 2.4, which is extraordinary. That's why you should invest in this company, ma'am. And the next one is quick ratio. So what is the meaning of quick ratio? It is like exact cousin of current ratio. That is, it is the same meaning, but here it aims more on it's like you exclude the inventory. How much debt you can pay without relying on your inventory. That is basically quick ratio. So in quick ratio, it is the same thing. It has been kept increasing constantly and smoothly from 2019 to 2023, which is a benefit for the company and also for the investors. They can invest in this company. Next ratio will be book value per share annually. So the meaning of book value per share is, it's basically a financial measure that shows the net asset value of a company on a per share basis. Just a minute, ma'am. So for example, if your company is going to shut down and then you had to pay all and you had to sell all your assets and you had to pay off all your debts, and how much ever each shareholder receives per share, that is your book value per share. So what does this book value per share tells us? It tells us the steady growth, asset strength, and also the shareholder value creation. For example, here in Jyothy Labs, the stock is at 379 rupees, like I said, on April 9th, and the book value per share is 49.3. The book value per share is 49.3. This means that the market is valuing the stock is about 7.7 times its book value. Now, how will you get the book value? the today's value is 379, right? 379 divided by 49.3, you will get the book value, that is 7.7. So it is 7.7 times higher than that value of the book. So you are selling it for a higher price. That is book value per share. So this shows that there's consistent growth, improving financial health, and the shareholders value creation. There is no fluctuation or dips. It is from 20 to 24, there is no fluctuation, smooth transaction, like it's increasing in a smooth way. The next ratio we'll be talking about is return on equity. So what is the meaning of return on equity? It basically measures how effectively a company is using its shareholders' equity to generate profits. So the purpose of this is in Jyothy Labs, as it is an FMCG company that deals in a fast-moving consumer products. ROE tells investors how well the company converts brand value, market reach, and operational efficiency into profit. So if we look into the graph here from from 2020 to 2024, we can see a dip at March 2022. Only there, ma'am, but otherwise it's all increasing. The next interpretation for this is ROE has steadily increased from 9.5 in 2020 to 2024 from 7. Sorry, 1 minute. Okay, yes, ma'am, it has been generally increasing, but there is just a dip in the between due to COVID, and you know how the price value of share market keeps going up and down, but doesn't mean it's a very bad company and everything. The next one is we have is operating profit margin. Operating profit margin. The meaning of operating profit margin shows how much profit a company makes from its core business operation before paying taxes and interest. So out of every 100 earned in sales, how much money is left after covering all the regular business costs like raw material, salary, rent, etc. So the purpose of operating profit margin in a Jyothy Labs Limited is it has costs like production, advertising, and packaging and distribution, ma'am. So obviously operating profit margin shows how efficiently and effectively the company manages these while generating its revenue. So the interpretation for this is from 20 to 2024, the OMP is fairly stable, ranging from around 13% to 16%. In 2020 and 2024, they are the strongest years, where they're standing at 15.4 and year at 17.9. The dip is only in 2022, which is at 13.3, which may indicate that there's a price in raw market, increase in raw market, which is due to COVID, and also supply chain disruptions, and also higher marketing expenses. But there's a recovery in 2024, which has happened in a very exceptional way, 17.7%. Next we have is long-term debt. Long-term debt ratio shows how much of a company's assets are financed through long-term debt, like bank loans or bonds that are due after more than 1 year. So here long-term debt includes borrowing that must be repaid within 12 months. So the purpose of long-term debt in a Jyothy Limited company is it must invest in manufacturing, logistics, advertising, like I already mentioned before. So here long-term debt is a must for them to get their funding done. So the interpretation here is there is a consistent decline in the long-term ratio from 2020 to 2024. That means they haven't taken so much of debt. So there will be no debts in this company. So the investors will get more dividend based on the debts. That's the basic logic of this ratio, ma'am. The next one is these are the other three ratios, that is ROCE. We can see there is a constant raise from 2020 to 2024, and total debt to equity is from 2020 to 0.2, but gradually it's declined, and in 2024 it's completely zero. That is, the company is debt free. It doesn't have any debt. Next is EBITDA marginal ratio. That is, it is also being seen declining and increasing in the future. The meaning is One minute. Fast moving inventory is equal to more efficiency, less waste, and better cash flow. So the next and the last ratio here is PV ratio. If you can see, now what is PV ratio? Basically, it compares the current market price of a share to its earnings per share. So it provides information or indication whether a stock at its current price is expensive or cheap for you to buy. Now what is the current price of this stock is 379.6. So is it cheap or is it costly? That is what PV ratio is going to tell us. So here PV ratio, a high PV ratio might indicate that investors expect high future growth in the company. If it's a PV ratio is less, that means the investors think the company might grow slowly or the cost is too cheap. So here, even though the investors are paying 37.44 for rupees 1 of Jyothy Labs earnings, other companies in the same sector are paying a much higher premium, that is 57.42. That is why, because Jyothy Labs might be undervalued, but in the long term it is much better than other industries. And this is the graph for PV ratio. So now I'll be talking about the SWOT of the company. The strength of this company is the company has no debt. Like I said, and we saw in long-term debt, there is no debt in the company, which indicates that it is a benefit for the investors to invest in the company. Next we have book value per share. I explained it that in book value per share, what is book value per share and how it benefits the investors in that. Improving from the last 2 years, not only from the last 2 years, from the last 5 years, that is from 2020 to 2024, there has been a consistent growth in everything. There might be dips in between, that is due to the COVID and other fluctuations in the overall stock market. That is why there is a dip in between. And the weakness for this company is declining revenue every quarter for the past 2 quarters. Declining net cash flow, company is not able to generate net cash. Then we have the opportunities, street favorite, that is in stock market you have something called street favorite, that is they are suggesting you to recommend your amount in this company, that is called street favorite. And then threats is obviously competition. There's so much of competition in this world, so competition is a must threat for this company. The next one is what does the future state? So if you when you invest in this company, how will your future look like? So this is the revenue forecast. Like I said, from 2020 to 2024 it was constant. In 2025, with respect to the current stock market situation, it's been going up and down. Even from the past on 10, 11, 12, 13, the stock market was crashing and it was almost shut down. And so that is that level, but it's still in constant level. It's not come down to that level. And in 2026, if you see, it is going to its peak. So that's how your future also will look. If you invest in this company, it will go to the peaks. And then here we have the EPS earnings per share forecast. And then we have the consistent recommendation, that is for you to buy and invest in this company. Either you can buy and then you can sell it, or you can just invest in a long-term base. Next, I have the conclusion that why you must invest in this company. The first is established in a trusted company. Like you trust and wash your vessels with EXO or Pearl, you should also trust the company which is manufacturing and cooperating with it. Next, it has a zero debt company. Like I said, this doesn't have any debt involved, and that is a pro benefit for the investors who are investing in it, because they will get much the amount of dividend which they are getting from other companies. Next is a clean corporate record, and it doesn't have any scam involved. I also searched for a very lot of scam stories in all the companies, but I didn't receive anything or couldn't find anything in this company, so it's so dead clean. And the next one is publicly listed 7 transparent, that means it is there are 7 types of transparency, and it is very transparent to the public's eye. That is, they are so open that they're keeping everything on the board. They aren't hiding anything from the public. So if the investors are also investing, they can invest freely and flexibly. Analyst confidence, like I said, each analyst will have their own confidence in each stock. So majority of the analysts have the confidence in this stock. this. Thank you. Please invest in Jyothy Labs.